Coming up on today's show, Egypt's central bank keeps overnight interest rates unchanged. In Namibia to repeal two tax policies partly to appease the European Union. And Ascom confirms stage 2 of load shedding to continue till Sunday. Hello and welcome to Business Incorporated. I am BC Adebayo. We begin the show with intraday numbers and markets in Africa. We're mostly in the red at intraday, except Nigeria's all-share index, which gained 0.14%. The GSC in South Africa shed 1.32%, and Egypt closed for the week negative on Thursday. Kenya also closed negative on Thursday. And most markets in the Gulf region closed for the week higher on Thursday, with Qatar outperforming as Doha Bank jumped after releasing a 5-year plan. In Qatar, the index closed up 0.56%, with Doha Bank surging 9.6%, and Saudi Arabia's benchmark index was up 0.5% as Al Rajhi Bank added 0.9%. In Dubai, the index was up 0.35%, with Emirates NBD rising 1.6% and Emirates Integrated gaining 1.8%. The only market that closed negative on Thursday was the one in Abu Dhabi, and it was down 0.8%, and that was dragged down by banking shares as First Abu Dhabi lost 1.2% and Abu Dhabi's central bank shed 1.6%. And in Europe, stocks declined this morning as investors monitor the latest developments in the coronavirus outbreak. Now, the spread of a new strain of the virus was the main focus for investors as the number of cases and deaths grew. Well, let's cross over to the Frankfurt Stock Exchange now, where Conrad Busin is standing by to tell us more. It's good to see you again, Conrad. How are you doing today?
I'm good, and I have to say, thank God it's Friday.
Indeed, thank God it's Friday, even though some of us will still be at work tomorrow. But let's move on now. The financial markets in Europe remain in the grip of the coronavirus, but Germany's purchasing managers' indices are showing a slightly positive development. Tell us more. What is the mood like among the purchasing managers in Germany and, of course, on the trading floor?
Well, especially purchasing managers working in the German manufacturing sector, they are in a much better mood than what economists at the stock exchange had expected. The purchasing managers index for the manufacturing sector rose from 45.3 points in January to 47.8 points now. Of course, we have to keep in mind a reading below 50 still indicates a contraction, but this increase to a level slightly below 50, that is better than the anticipation of economists. And look at what the German share index is doing today. It's slightly rising. But of course, you mentioned the coronavirus and the economic fallout due to this virus and the epidemic. That is still the topic on everybody's mind here, especially as this weekend in Saudi Arabia, in Riyadh, G20 meeting will take place of the finance ministers and Reserve Bank governors of the G20 countries. The Japanese chief of the Reserve Bank there, Haruhiko Kuroda, said in Parliament in Tokyo today that the biggest topic on this meeting this weekend will for sure be the economic impact of the coronavirus. But Mr. Kuroda also said that it was not yet time to discuss whether additional monetary easing was needed. So I have to say the general mood on the trading floor here in Germany and on the trading floors in Western Europe is reluctant, hesitant, wary, I would say. Everyone focusing now on this G20 meeting this weekend.
All right. Now, the U.S. bank Morgan Stanley is planning the biggest takeover in the U.S. financial sector since the financial crisis by spending $13 billion for online broker E-Trade. What are traders saying about this? Is this a clever move?
Generally speaking, Yes, of course, this price, $13 billion US dollars, might be a bit high, and it also might not be a given that the regulators in the United States will easily approve of this deal. After all, the cluster risk or the clump risk, the risk that too much financial power is concentrated in not enough hands. This risk is rising because of this deal. Also, it's going to be interesting to see when a takeover like this happens, whether really all the clients of the company that's taken over will really go to the new owner. We have to keep in mind brokerages, online brokerages like E-Trade were founded years ago as a bit of a counter offer, a counter story to traditional brokerages like Morgan Stanley. But generally speaking, for Morgan Stanley, this really fits the strategy. It allows to strengthen a business of Morgan Stanley, which has been gained in influence and in importance for the bank in recent years. That's wealth management, asset management. And this growth in this part of the business will allow Morgan Stanley to become more independent from the shaky earnings in investment banking, of course.
Before you go for that weekend, tell us about this lawsuit in Germany where Apple is suing a former German executive of the company, and that's Jared Williams, accusing him of betrayal. What exactly is going on?
Well, that's really an interesting story. The name of the guy is Tom Sadowski. He used to work for Apple here in Germany. He ran the German language App Store. And his book is exactly about this, about the App Store, and it is giving app developers advice how they can, use the App Store more cleverly for their income, how they can perform better in this App Store. Experts for Apple and also legal experts are saying that the book does not contain anything which is not public knowledge, knowledge in the public domain. Still, Apple has sued the publisher, wants to prevent the publisher from delivering and selling the book. I can tell you, this not only shows what kind of control freaks are in place there at Apple, the company that really wants to control so much of its own story. This is also the perfect publicity for this book author and for this book. It's already very much in demand here in Germany. It's #2 on Amazon Germany's bestseller list.
Well, many thanks, Conrad, and enjoy your weekend.